Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard.
Welcome back to the show, John.
Jim, pleasure to be back on the show.
John, you're going to be in Vancouver September 9th and 10th for the Metal Investors Forum. What sort of companies are you inviting in light of the overall market gloom?
Well, the overall market gloom that I see settling onto the resource juniors is this belief that the interest rates, no matter how high they raise them to try and subdue inflation, will be ineffective, and that we may get a repeat of what we saw in the late 70s when Paul Volcker was contending with 14% inflation and jammed the rates up to 18-19% to try and subdue that inflation. And that inflation back then had become entrenched in expectations, and it was a vicious circle, and it took them a long time to purge these inflation expectations out of the system. Right now we're dealing with an inverted yield curve, which is suggesting that you are going to induce a recession, and you will be lowering the interest rates down the road, and inflation will go away. But what anybody who's sort of following the resource sector is thinking that the cause of this inflation has two primary sources. One is the supply chain holdups coming out of China, where the zero COVID policy that Xi Jinping has made a symbol of the superiority of autocracy over democracy, that is gumming up things seriously in China, to the extent that the GDP growth in the second quarter came in at 0.4, which is only 1.6% on an annualized basis compared to the 5 to 10% China is used to. And considering that the data that comes out of China is never trustworthy, the fact that they gave us this low number suggests things are seriously bad. But the BA.5 variant of the Omicron COVID, this thing is crazy. Every other day now I find out from a friend, oh, I've had COVID. And today I was talking to somebody who said he had really, really bad COVID to the point where he had to be hospitalized, and he was a double vaxxed person. So this current variant, which is everywhere, is extremely transmissible, and I just cannot see if now that this is in China, how Xi Jinping can keep this thing from circulating. And he's really built a trap for himself where if he does like we do and just throw up our hands and say, well, let the cards fall as they will. I'm double vaxxed. I'm double boosted. Hopefully I don't lose my sense of smell and therefore ability to taste good food. He's going to be stuck in this situation of very angry people if, despite all the hardship he has inflicted, this gets loose. Plus, he will be humiliated on the global stage for trying to show how superior his autocracy is. And on top of this, we now have China baking just as bad as the poor people in Texas are, and in much of the world, thanks to the climate change that, the energy transition seems to be not making much progress, thanks to Democrats in name only, who are voting against anything that would help with the energy transition. And this now creates a problem for him, because he has to be confirmed in November at the National Congress for an unprecedented third term. And he's changed the rules to allow this. And the United States administration has started to sound the alarm that these incursions by Chinese fighter planes into Taiwanese airspace, it has been increasing. They've even warned Nancy Pelosi, please don't go visit over there right now. Don't stir the horn. Don't poke a stick in the hornet's nest. And though China's wolf warriors have been out there trumpeting that the Taiwan Strait is actually Chinese waters, and American naval ships are not allowed to actually cruise through there, go up and down and show their support for Taiwan. So the risk here is if this Omicron really breaks out in China and Xi Jinping is humiliated and doubles down and tries to and creates further supply chain disruptions, he could end up being bounced out. And again, the easiest way to deal with that is to create a national pride event by annexing Taiwan and then putting the Americans in a position where they either lose a lot of face and let this happen because the semiconductor industry is largely based in Taiwan and they don't really want to lose that, and they don't want to get in a conflict with China because that would seriously disrupt the supply chain and export even more inflation to the United States, even with demand dropping as a recession kicks in and everything goes downhill. You'll see scarcity of goods causing inflation to persist. And the other problem, of course, is Russia with its withholding the 33 million tons of Ukrainian grain. This little pretend deal that they did, followed right away by bombing Odessa. He's not going to let this grain out into the world. He's going to export inflation all over the world as the world scrambles to reallocate food supplies for these parts of North and Eastern Africa that normally depend on the Ukrainian grain supply. And of course, the games he's playing with the natural gas, that's going to export inflation to Europe. It's not going to go away. And he's playing for keeps. He's not going to back off. He's dug himself also in as deep as Xi Jinping. So I see a situation here where inflation is going to stay high. Interest rates are going to keep rising. We're going to see an economic downturn. That's going to be a big lead blanket on the resource junior market. And it makes the typical story that one likes to tell at these metal investor forum conferences about, okay, gold's going to go up, copper's going to go up, everything's going to go up. These companies that have these existing deposits that they're advancing, doing feasibility demonstration work, these are all destined to go up. That story is not going to be working. So the story that I'm shifting to is I'm actually going back to the first 2 decades of my 40-year career, and that is discovery exploration. Discovery exploration was what the 1980s and 1990s were all about. The juniors never took a discovery beyond delineating it and then either being bought out or farming it out to a major to do the development portion of it. And the dynamics of the discovery exploration play, it is quite exciting, and we don't really have it anymore to the extent that we had in the 80s and 90s. And of course, in the 80s and 90s, you would have lots of these little recessions coming and going, and when there was a recession, everybody would be subdued. But even when they're all depressed and market activity is slow, somebody pulls a great discovery hole, and suddenly everybody wakes up and they swarm in, and the discovery play becomes a speculation island unto itself. The participants don't care what the macroeconomy is doing. They don't care what the gold price is doing, what the trend is down or up or sideways. All they care about is how big and how rich will this discovery get. And if it's a kind of a geological context where it's something new, then also you get the speculation, well, who else is going to find something just like this, perhaps even better, in the same sort of geological setting? And so the companies that I am inviting for the September conference are all ones where I see an emerging discovery. And it's important to emphasize emerging discovery. It isn't good enough to have a geological target, a geophysical target that you're blasting a hole at. I want to see evidence that you're already in a system, perhaps on the edge, and you're now starting to grope towards its center where it becomes a clear-cut discovery. And we're in this, the nice thing about this bearish market is the glass is half empty. That the market sees this stuff, says, yeah, that could be a big discovery, but I want to see the assays first. The visuals aren't good enough. And this intersection isn't like a barn burner, no-brainer type hole, so I want to see that. But if you put your geological smarts to work and look at the context and then also look at the body language of the people managing the company, you can see great opportunities to buy companies that have only modestly lifted off the bottom and yet are showing information that with the next round of drilling, it's going to really take off, and then everybody will be in there, more money will be raised, and it'll be like a minimum 1-year cycle unless it's got a seasonal component, a constraint such as winter when you can't drill in winter, then it may stretch longer, but you get like a 12-month run of speculative intensity during this period. And those are the kinds of companies I'm inviting for my Metals Investor Forum session in September.
What are some of the big discoveries you remember from the first half of your career?
I started gambling in the resource junior market in 1978 when I started university, and I caught that crazy period when gold ran to $850, and I had my $2,000 ended up being worth $14,000 at one point. But then when the Volcker shock treatment kicked in and collapsed everything and started to subdue inflation and induced a recession, by the time I graduated in 1982, not only had I lost all my winnings, I had lost half of my initial real money investment. So in 1983, the recession's still limping along. I don't have a job. I still have my broker, and Hemlo had come along. Hemlo was the first discovery play that I witnessed. Now, the exploration work started in 1981, but the discovery hole, I don't think it was until 1982 when they hit it. It was like hole 80, many holes after the beginning, and this took off. And the Vancouver Stock Exchange, after a crazy period in 79 to 81, had slumped into a very deep bear. But suddenly the phone started ringing off the hook. My broker, Bill Ayukawa, he had been the kind of person who collected a lot of information, news releases, filed them all. That was his key to keeping track of who was who and what was going on in the history of people, plus his network of contacts. Back in those days, it was who you knew and who you could trade gossip with to understand what was going on. Well, his assistant was too busy to answering the phone to do this, so he hired me as a temporary file clerk, and I ended up staying there. And the next really big discovery was the SK Creek discovery in 1989-90, and this was also, so post-1987, we'd entered a recession and a bit of a bear market on the Vancouver Stock Exchange. And again, this was a discovery whose implications were so big with hole 109 that it completely reignited the market. And you even had a major area play surrounding it, just like you had with Hemlo. None of the Hemlo area play people, apart from the ones that had parts of the original deposit, ever found anything. Golden Triangle area play was a bit different, but nothing like SK Creek itself was found by anybody, though SK Mining, which today put out an update, or yesterday put out an update, indicating that the Scarlet Ridge, where they are now drilling, the first hole has already hit sulfides. Don't know if there is any gold or silver in it, but it's like 7 kilometers to the east of the SK Creek trend. It looks like their own trend is about 8.5 kilometers. The press release is just brimming with body language and enthusiasm, and it looks like this is an emerging discovery. And although SK Mining at $2 already has a pretty good valuation of about $400 million, this is an example again of how this could reignite interest in not just this company, but in that general area of the Golden Triangle. And then the next one, which was even bigger for me because by then I had enough money invested in it, that was the Lac de Gras discovery, the diamond discovery in the Slave Craton by Diamet, and all those other little companies that were around it. In 1993, the DHK group found the DO27 body, which appeared to be bigger than any that Diamet had found on the Acadie ground, and had similar micro diamond counts. Rio Tinto through Kennecott was the partner, And then in 1994, Aber finally found the Diavik pipes, the A154 and so on. That eventually became mines. DO27 didn't. But that 92 to 94 cycle, we were again back in the post-SK bear market, and it was insane the way it all exploded, and it lasted for several years. And then by 1995, Voisey's Bay rocked the junior center, discovered in Labrador by Diamond Fields, the ovoid, a phenomenal 30 million ton, 4% nickel, 3% copper deposit, open pitable, and that generated an area play which also didn't really generate any discoveries outside it, but everybody swarmed into it. And that was actually when I launched my own newsletter. I had moved to the United States. I worked for a while for Bob Bishop, but then struck out on my own. And out of this was also born the big fraud, Bre-X and its Busang discovery in Indonesia. That emerged in 1995, was exposed as a fraud in 1997. Offsetting that was the Parina discovery in Peru. This was an actual grassroots discovery made by Eric Ipa that was bought out for $1 billion at around $30 by Barrick and turned into a very successful mine. Those were the big ones from the 80s and 90s that I remember, and each one of them, they stimulated intense market activity, often emerging from sort of bearish conditions and metal price trends that nobody really talked about. And then we had that sort of slump between 97 and 2002 where .com took over and gold went to 260 and the resource juniors really suffered. During that period, they created the National Instrument 43101 disclosure reporting standards that transformed the industry. By the time 2003 rolled along, discovery exploration had ceased to be the big thing that it was. Yeah, there were fantastic discoveries like Ivanhoe's Oyu Tolgoi and Northern Dynasty's Pebble, but both of those were rethink of existing systems that had been discovered before that were deemed marginal given the current metal prices. And this was right on the cusp where the China supercycle was kicking in. And by the time that the majors recognized the China supercycle in 2006, metal prices had increased 5 to 10 times real price increases, and that created this third world frontier boom, which had started in the 90s with parts of Latin America, and of course Bre-X itself was born in the Southeast Asian aspect of this, and then Africa too became a place where Australian and Canadian juniors went, and they would find these old systems and they would rethink them and sometimes find additional mineralization, but generally benefit from the rising metal prices. And during that sort of 10-year period to 2013, there was over $120 billion worth of takeouts involving majors and junior companies, which totally eclipsed all the sort of takeover activity that happened during the 80s and 90s. And the odd discovery, such as Aurelian's Fruta del Norte in Ecuador, these were short-lived plays that hit maximum valuation very quickly. Public didn't really even have a chance to get into it. And then, of course, in the last decade, it's been a bit of a muddle. Even the Hermosa Taylor discovery by Arizona Mining in 2016, bought out in 2018 for $2.1 billion by South 32. It did not really create the discovery exploration dynamic of the 80s and 90s. And I think we are, however, returning in this current slump, which despite the blip we had in 2020 and in early 2021, we're now still stuck in that bear market, which began in 2011 when gold started to retreat and Fukushima came along and wiped out the uranium market. I think the ability for the juniors to survive, it's going to have to be delivering new discoveries that rebuild lost audiences, that bring retail and family office money back into these juniors and create these little speculative bubble worlds that are limited to the discovery and its immediate surroundings.
Have any of your invited companies accepted your invitation?
Last week I talked about uranium, and in particular Canalaska uranium, with its what I think is an emerging new discovery at the West MacArthur project. And Canalaska uranium I have invited, and they have accepted. And I think this is going to be a classic example of a major discovery that revives the old-fashioned speculation. The stock is, after, first going from 25, 30 cents after the news came out on July 15th, it jumped about 40 cents, traded several million shares. Last week then it also traded another million, got to 50. But in the past week, it has sort of, volume has died down. The price has sort of settled into 45 cents, and it was kind of like, okay, this obviously isn't being treated as a major discovery by the market. And, I talked to Peter Dassler about this, and he said, we're in this, glass half empty bear market, and sure, they see the 6 meter interval, and they can see the pitch blend and the uranium oxide, in there, and that this looks like a 3 times wider version of the original Eagle Point discovery hole. But they say, give us geochemical assays. We'll wait for that. And so the stock has started to perk up again as people dig a little deeper. And the two things they're seeing is the geological context and the body language of the management team. I had a good Zoom session with Corey Bellick and Peter the other day, and that added a lot of nuance to why this West MacArthur discovery, hole 67, is so interesting. And, this West MacArthur project they've had it for a long time. Canalaska has been up there for 15 years. It's probably spent $60-70 million during this long uranium exploration focus on the Athabasca Basin. And what made the West MacArthur project interesting is that onto it, the C10 structure that hosts or conductor that hosts the Fox Lake deposits that Orano and Cameco own, and that appears to be about a couple of pods totaling around 400,000 tons of 8% U3O8. And Cameco had optioned the project in 2016. West MacArthur, they could go to 60% because they wanted to chase this conductor onto the other side of the border. And they spent $5 million, and Canalaska, after 2018, Cameco declined to go beyond 30% and stop participating. Canalaska has also spent money, and the 42 zone area, they've got lots of smoke in that, but they really don't have any significant uranium mineralization where you can see a deposit start to emerge. And they've been trying to figure out where this trend goes, and they've seen two trends, one branching sort of in a southwest direction, and another one more in a strong southwest-northeast direction. And they could see that from the general EM anomaly, but it was a fuzzy anomaly. And in 2007, they had even drilled holes into that southern branch and did not get anything, so they didn't really think it was fertile. But after they raised that $12 million in November, they went in there and did a new EM loop survey over this whole area. And what emerged was a very discrete conductor. And the conductor will be the graphite that sits within the fault structure. It's the conductive portion. And if the hydrothermal system was active in the area and harvested uranium from the sandstone cover, it would have deposited it into the graphite that's either at the unconformity or within the fault structure and form these sort of high grade vein systems. And when they were looking at where this line showed up, and they'd seen their line of holes drilled back in 2007, and said, my gosh, the actual conductor, and these are fairly skinny things, it's 100 meters offset to the northwest. So we just missed it. And this first hole that they drilled is something of a miracle hole. Corey Bellick, who was with Chemical for 25 years, was saying that the McArthur River, it took them 108 holes to actually find the lenses as they were chasing the P2 conductor structure that hosts the McArthur River. Now, they were going to do some wedge probing on this, or wedging on this hole, hoping to they intersected this 6 meters, about 100 meters beneath the unconformity between the sandstone and the basement rocks, which in this area are metasediments and graphite. So and they've even got alteration for 100 meters above. Normally these alteration plumes will go 500-600 meters above the unconformity into the sandstone if the cover is that thick. But in this case, the 100 meters doesn't matter because they approached it from trying to drill a perpendicular to the inferred fabric of the structures. So the plume probably goes in a northwest direction. And so they're looking at this whole geological context, and they're statting the 6 meters at 906 meter depth, which is probably 125 meters down plunge from the unconformity. They were trying to wedge upwards, but the hole was too steep, so it wedged downwards. So they've taken this other rig that they were using to drill the C10 target conductor, which hasn't really yielded anything, but they're now on this one, which looks like the same sort of series of structures that host the McArthur River, which is a multi-billion-dollar deposit. And they're going to park that in there and drill the pilot hole above it so that they can then sort of just feel around it, get the geometry sorted out. They'll have maybe 5 or 6 pierce point into this target by the end of this year. These are sort of going to be 900 meter, 800, 900 meter holes. And I think with these, when the geochemical assays come, which are being rushed, we will see the market take off. We're kind of expecting a couple percent. If it ends up higher, the market will be very impressed, especially given the 6 meter thickness of this interval. And we will have a discovery play that plods in slow motion. And if the company seems willing to provide lots of information about what they have intersected and the visuals and all that, so that we can sort of in real time speculate how is this story evolving. So we're on the threshold of shifting this from discovery to discovery delineation mode. And this, of course, as I talked last week of mentioning Forum Energy, this will reignite interest in that whole Athabasca Basin area where the market's kind of after NextGen discovered the Arrow deposit, it became somewhat uninterested. That feasibility study done, uranium prices still suck, and we're waiting to see when somebody's going to be willing to develop these new discoveries. But in the eastern part, it's particularly interesting because Chemical and Denison, they have all this processing infrastructure. The ore that they have delineated is not going to last forever. And so if Canalaska demonstrates that after all this persistence and using newer geophysical techniques to see clearer and sharper, and now we are actually connecting, in fact getting so good that we get lucky with the first hole and spear the zone with the first hole, this will, I think, create an area play, a revived area play for the Athabasca Basin.
Last week, Endurance Gold announced initial results for its core drilling program at the Reliance discovery. Does Endurance Gold qualify for your September Metals Investment Forum session?
Endurance Gold has been invited. I have not heard back yet because Robert Boyd has been in the field on the Reliance project supervising the exploration program. I last talked about it on Kaiser Watch at the end of June, and when they had published an update on the RC drilling, and they had published a map of drill holes that they had done. But today, or not today, on the 18th of July, they published results for the first two holes, number 23 and 24. And these holes had both good news and bad news in them. They were drilled to the southwest of the 020 zone, which runs in a sort of northwest-southeast direction. And it was sort of drilled in the vicinity of hole 20 last year, which revealed the existence of a subvertical zone that seems to be the feeder to the shallow 35-degree dipping zones, where they get really good thicknesses, about 15 meters of gold running 10 to 15 grams per ton. But because this is a sort of a corridor involving a thrust fault coming from the southwest, the concern was, well, it'll run out of room as it dips towards the fault boundary. So we only have, maybe these 300-meter wide zones, 10 meters thick, running for, in patches of 300 along the trend of the structure, which is, I think, now been traced for a couple kilometers. But the revelation about the 020 zone was that, okay, this is a mesothermal orogenic system where it can go vertical to a great extent, and now we have the vertical feeder. Now we're going to chase this down dip to see what happens and see if we can find other of these sort of planks emanating from it, similar to the near surface Eagle Zone that they have been tracing out with their RC drilling program. So the bad news was that these holes, where they intersected the inferred strike of the 020 zone, hole 23 yielded only 1.6 meters of 9.6 gram per ton gold. Good grade, but considerably narrower than the 25-meter hole that yielded almost 16 grams per ton in hole 20 last year. And the other hole, 24, where it intersected the 020 zone, they got 3.9 meters of 8.4 gram per ton gold, which is also narrower, still good grades. But what it's telling us is that maybe this zone is pinching out at depth. Now, this could just be a localized phenomenon. It remains to be seen from further drilling, but we would have preferred to see thicker intervals as they pierce this at a greater depth. But the big surprise was, because this hole, the drill pad, was built about 100 meters to the southwest of the zone, the farthest away, it managed to nick what appears to be, in both holes, what appears to be also a parallel zone that's also mineralized. And hole 23 gave us 4.2 meters of 6 gram gold, and hole 24 gave us 12 meters of 8.4 gram gold. So this is the really positive news. And then they took the drill, and the interesting thing about this press release was they did not talk about the other holes, 25 to 31, that had already been drilled. Not a peep, other than to indicate where they were drilled and what the trace direction and length, horizontal length of those holes were. And so that was kind of frustrating, and Robert Boyd doesn't like to talk about these things, visuals and so on. He says, read my lips, and you try to, and they don't move. So, okay, guess I'm out of luck, not going to get any clues from him about what they're seeing in the field. But when you look at the drilling pattern behavior and ask yourself, if you're a guy or a gal with running this drilling program, you're going to be very conscious about not wasting time and money drilling tombstone. So with the holes, the next couple holes, they went to the other side of the 020 zone and drilled a couple of angled holes to kind of almost scissor the holes 20, 23, and 20, 24. And that, we don't know what they said, but it was designed to at least make it through this parallel zone. So what they saw there, Who knows? It's going to be interesting. Both of them will have hit the parallel zone deeper than the first two holes. So that's what remains to be seen. We have to wait for assays to see what happens, and also where they intersect they would have intersected the 020 zone higher up. Maybe we'll see that it's a bit thicker higher up. Who knows? But then they moved about 150 meters or so to a long strike to the southeast and set up for holes 27 and 28. And 27 was a very long southwest hole that goes through the 020 zone, also passes through where you would kind of project the new parallel zone to be, and that's around 100 meters on a horizontal length, and the actual hole will be longer because it's angled. But then they push it, and almost 200 meters horizontally into like uncharted territory. You say, okay, that's fine. It's a speculative hole. They're checking the geology, see what's going on there, and then they drilled a deeper hole that isn't really designed to hit the parallel zone, but to test the 020 zone, and then they spin the drill around and drill it uphill into an area, away from the 020 zone where they have gold and soil geochem that's not really explained. So that's a speculative hole designed to try and see what's going on with the geology in this area. But it's where they go for the next two holes, holes 30 and 31. So they move 50 meters closer to the ones that the earlier core holes, towards where the 20 hole from last year was located, and hole 27 is almost, or hole 30 is almost a parallel clone of hole 27. And you ask yourself, why would they do that? Unless what they saw in the core in hole 27 all the way to the length was encouraging. So the fact that they duplicated this hole, except a little closer to where they have confirmed assays for this new parallel structure, that's a major clue that this parallel zone is shaping up to be something very significant, and that there may be more stuff going on, additional parallel zone under these other rocks that at surface aren't particularly interesting. So this is, again, why it's an emerging discovery play where you get the assays, and that tells you a lot of concrete information, but the company is able to provide you information that allows you to see into the future somewhat and start speculating. And that is the essence of emerging discovery plays. And it's interesting, almost everything that is of this nature has sort of slumped in the past 3 or 4 weeks. However, endurance gold, which would always rise a bit on the good intervals and then sink back, it's actually holding its own at 45, 46 cents. And you can tell that this is starting to attract a broader audience, which is looking at all this data, putting together all these fantastic diagrams that Robert Boyd's team produces, and they're starting to see, wow, this thing is going to explode. One of these holes is really going to crack open this story, and this thing will be, taking off with crowds coming in from everywhere. That is the essence of the old-fashioned sort of 1980s and 1990s discovery play on the cusp of being confirmed as a major discovery, and then unleashing S-curve trading frenzy, where the pricing, the valuation, will often end up being what it ends up being worth at the end of the day after years and tens of millions of dollars exploration. It's this S-curve activity. That is the essence of the discovery play speculation, and that's what I'm focusing my interest on right now. I'm still doing my optionality plays and my speculations about, metal prices taking off because of the energy transition or supply disruption if the world fragments into different trading zones. But for now, I'm interested in emerging discovery exploration plays like Canalaska and Endurance Gold.
John, thank you so much for the update.
You're welcome, Jim.
We've been talking with John Kaiser, his website kaiserresearch.com. I'm Jim Goddard. Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.